video for Tuesday, September 30th. Markets really were down big in the pre-market, and that's all on that China news coming from the overnight session, but closed well off its lows. Dow Jones was at one point down triple digits and ended up closing down 41. Nasdaq down 6.75 points. S&P down 5, and a Russell down $1.42. So nice recovery off the lows. Markets are still pretty sluggish. I would have loved to see the washouts in some of the indicators, momentum indicators that we follow, but as of yet, we did not get that. So where do we go from here? I mentioned the Russell. Watch the Russell at the 108. We'll go over the indexes today. That's going to be a key support area, and if that gets lost, then I pretty much would be safe to say that a lot of the indices will follow suit. It is the canary in the coal mine. I do think that the Russell will probably lead the markets lower. We are coming into some seasonal weakness, as you know. Usually September and October are notorious for having some pent-up volatility, which I like to see. The more volatility comes into the marketplace, obviously there's more opportunity. So I want to show you the dollar index. The dollar index is up 46 cents today, and that is just absolutely incredible. We have going on 12 weeks straight up vertical, and I do think the multinational companies here in the U.S. are going to get hurt pretty bad, especially when earnings season is just around the corner. And you're going to see how what a big chunk it's going to take out with this currency risk that they have here. So that's going to be a big factor in earnings this quarter that we are now approaching, reporting earnings. And I do think that from what we're looking at here, that the markets are going to be into some turmoil coming in the next few weeks. Now, we are up in the pre-market, so we want to monitor how the rallies are. Like yesterday, we had basically a dead cat bounce coming, some short covering coming in, and the markets have been, like I said, with no memory, one day up, next day down, one day up, next day down, and most of the important indices, at least the 5 that we follow, 3 of them are clinging to the 50-day moving average. So I would love to see a bounce into some certain key areas, which I'm going to show you in the indexes. So dollar index, as you can see here, at one point you're going to get a pullback. You got to get a revision to the mean pullback here, whether it be at least to the 8 or at least to the 20. So keep an eye on the commodities. Now again, we could continue to rise, and the next stop is really right around here is $89 at the 2618 here. So this is really important, and we can easily get up there. Currency are true to the trend, so when you see you have something like this, that would never look to short it. And we do have the commitment of trade reports come out that the reports continue to show extreme shorts in the dollar index, which is the retail crowd, which normally they're wrong. So to me, the dollar continues to rise, and if that's going to happen again, at one point, and it's happening now, you really haven't really showed it, or lack of publicity or news coming from the pundits about the almighty dollar continuing to rise here. Now, you can look at it 2 ways. You could say, the dollar is a safe haven, which it is. It is the almighty buck, and we have large amounts of foreign money coming in, so their money has to be converted to U.S. dollars and buy our goods here. That's a definite way to look at it. It's a positive. Or it's just a safe haven trade that people are nervous about what's going on, and we need to park our money somewhere, and they buy the dollar just for a safe trade, until the volatility subsides. And they also buy healthcare, consumer staples, which have been doing quite well, and utilities, right? For the high yield, they get whatever yield they can, and bonds. So got to keep an eye on this, because this could go both ways here. And if money is rotating into it, then you shouldn't have a large impact of the downside. Okay, if money is buying dollars and staying in dollars, well, it's going to hurt those multinational companies, which has hurt. Just perfect examples: Caterpillar, CAT. So let's just keep an eye, and it's very important to know what's going on around your surroundings while you're trading, even if you're day trading. Take a look at the ES. Here's a monthly chart. I don't show you the monthly too much, but I want to show you how insane this has been. Remember, we have the 2009 low, 666, and then we rallied, and then right around here we started QE, right? And now we have QE1, QE2, Operation Twist, yada, yada, yada. And sure enough, now we're at these levels, and the Federal Reserve is ending QE. So by ending QE, uh, this is all up because of QE and, of course, the Fed printing dollars. So at one point, you're going to get a break of this bearish rising wedge, and it's only bearish if we break the lows and close below this. Now, this is a monthly chart, so it takes a long time for it. But I just want to show you where we've come. We've where from the lows of 666 up to 2014 in the ES. That's a big move in only a few years. Here's the daily chart, and you can see here. Here's that break, that 1955. If we break that on a closing basis, you're going to test this pivotal low here from August, and then of course we're going to be starting that downtrend, which I think we started, right. We had a high, lower high, and we're clinging to the 50 here, clinging to the 50. So this is important. We need to see how this reacts, and if we take out this pivotal low in the ES, then I think you're going to have some decent downside here. Okay, and again, when that does happen, I'll start to look for some downside targets. Now, we do have that head and shoulders that's still valid. We have this downtrend line here, which capped yesterday's move, and we also have lower highs and lower lows, as you can see here. We have that head and shoulders pattern, which measures to 1922. Let's see if we get down here. That's going to be the first target in 1922 area. Take a look at the diamonds. And again, diamonds, you can see the volatility starting to pick up here. Larger candles versus small little candles. And then, of course, we consolidated here. And now we're back above the 50-day moving average. But again, if we lose the 50-day and the rest of these indices that I'm just showing you, then I think you're going to have some further downside and an increase in volatility, and which tells me that the markets, they move very fast when you're selling off versus when you're moving higher. And as you can see, here's the Russell 2000. Again, the canary in the coal mine. We put together this Fibonacci sequence here. As you can see, we had the from high to low, from the big high to low, and then we had one from the smaller high to low here. We did get that 61.8%, which got capped again with the 1272 on this smaller version, and then now we started rolling down. Now you can see we stopped right at the 110. 108 is that key, like I showed you yesterday, and then you can see that from the weekly chart. This is all of 2014 here, as you can see, and part of 2013. If we start to break this 108, then you're going to look for 94. Eventually, at one point, the target would be that 200 week, moving average. So this is not a pretty sight here. So let's just keep an eye on this. I'd be watching what happened with the IWM's intraday, because if we get some intense selling intraday, it's going to pull the rest of the indices down with it. And is one of our leaders. Here is the leader, which is the transports. Did okay yesterday, held up rather well at the 50-day moving average again. If we start to lose this, I would say the next step is going to be that pivotal low here, where we had back in June. We hit it, and then now we rallied up, and now we're back right in that range here. So a break below this 50-day on a closing basis, I think you get a real good flush, at least to the lower trend line channel, and then, of course, this low here, and then we would reevaluate it. And then lastly is the Qs. Now, the Qs did quite well. They held up well, as you can see from the small little sell-off we had in August, and now we're getting that volatility again. Take a look keep an eye on the larger names in tech. You have the LinkedIn, the Teslas, and I keep mentioning that because they were the ones that led the Qs higher. See what happens if we start getting some weakness, which we have been. Now, they could recover, obviously, but always keep an eye on that, because I think that's going to be a big game changer if they start to really break down and money comes out of that sector, okay? All right, guys, let's see what happens. We do have, at the end of the month, remember, we have end of the month window dressing. We also have mutual fund inflows, and today is Turnaround Tuesday. So whatever, if you don't think it means anything, believe me, for some reason, I have no idea why, but it does mean something. So just keep an eye on that. Let's look to possibly be entertaining some shorts at higher levels, not at these levels here, okay? Let the markets bounce, and in the meantime, look for some stocks that have been basing for the sell-off and that are looking to catch some sort of a bid here that you can ride up and see what happens when the buying has subsided, and see if this market starts to move lower again. Okay, I wouldn't be looking to short here. I'd be looking to buy any pullbacks going into today and tomorrow. Again, mutual fund inflows should affect the markets at least in the next couple of days. All right, guys, have a great day, and we'll speak to you tomorrow. Take care.